Hi, welcome to the FinTech sessions. FinTech has been a kind of, really buzzword in Korea for last 10 months. And it is actually the really more, some kind of, global phenomenon right now. So the investment for the FinTech, area last year being actually increased 3 times, compared to the 2013. So it is amazing to see that the new technology actually emerging and it actually reshaping, reinvent the finance, industry right now. So we have 3, some great the speakers panel for today, but unfortunately, Mr. Alejandro Estrada is not able to, make this session today. He has some family emergency all of a sudden. So he actually, instead of attending the session, he sent us some video presentation about 5 minutes. We're going to watch the video presentation of Mr. Estrada. So before we begin the discussion, I'd like to introduce our wonderful panels, briefly. So Mr. SEOUL Htite, we don't need to more repeat the introductions, and actually I really appreciated that your fascinating presentation. It was really helpful to understand how P2P works and how it gives the people some more benefit to the to the people and the industry and the whole economy. So I'd like to hear about the more. And Mr. Han Kim is the general partner and the founder of the Altos Ventures, focusing on investment area of mobile and software services. He's been kind of avid investor for Korean startups for recent several years. He's been an investor for the Coupang, 배달의 민족, and Jikbang, and Bit. So many famous, fast-growing Korean startup company. And interestingly, he's been actually investing several Korean fintech startups, such as Viva Republica and Lendit recently. So we would like to hear a little bit more about why he made those investment for the such a fledgling Korean fintech startup, and what's the background, and and his thought about the future of the Korean fintech. And Mr. Alejandro is the partner of the Angel Forum, where he focuses on leading investment and advising fintech, digital commerce, security, and internet high-growth companies. He has over 25 years of the global expertise in strategy, business development, product innovation, and finance and risk management. He's been working for many financial institutions such as Visa, Banco Santander, and also worked for the Hewlett-Packard and McKinsey. So before we begin the discussion, I'd like to watch his video presentation about the overview of the fintech industry in the United States. Please play the video right now.
Hello and good morning, Seoul from Silicon Valley. My name is Alejandro Estrada. I'm one of the partners at the Angels Forum, one of the most established and recognized angel groups in Silicon Valley. I was really looking forward to attend the beGLOBAL conference, since I know it's one of the most important startup conferences in Asia, and maybe get a chance to see the Jungwook Palace and the iconic In Tower. But unfortunately, I was not able to make the trip due to an unexpected personal matter. Before I start my introduction on FinTech and the industry in the US, I want to thank Young James, founder of beGLOBAL, and Jungwook Lim, Managing Director of the Startup Alliance, for their invitation and for allowing me to share with you these 5 minutes of an introduction on FinTech. So let me get started by sharing with you a quote in the annual letter that Mr. Jamie Dimon, the CEO of JP Morgan Chase, shared with his shareholders. So in one of the sections on this annual letter, he said, Silicon Valley is coming. There are hundreds of startups with a lot of brains and money working on various alternatives to traditional banking. They are very good at reducing pain points and make loans in minutes, which might take banks weeks. So he goes on about talking about the startups delivering a lot of services, being very competitive, and also he acknowledges that big banks like his need to start partnering with them more. He talks about Bitcoin, about PayPal, about merchants developing solutions. So this is one of the first times that a large bank acknowledges the importance of the startup industry and ecosystem in developing the fintech industry. Moving on to the next slide, I want to just share with you the size of the fintech industry and how it is comprised. So fintech is one of the largest industry segments in the US. It represents about 16% of all the market value of all the companies in the Standard & Poor's 500 in 2014, only led by technology, where companies like Apple and Google and others play. So this is a very large industry. There is many different ways to segment fintech. Traditionally, one of the biggest segments has been lending, that represents, out of the $2.2 trillion of revenues, about 900 of those in 2013. It follows, insurance follows it with about 700 billion, payment with 300, and then personal finance with over $200 billion. So really, fintech has been very important to banking and finance for many, many years. In the past 10 years, we've seen a lot of changes between the entrenched incumbents and new players. So this has been due to a lot of different things. One, and probably the most important recently, is the big economic crisis in 2008. That created a big gap between the entrenched players and the new players. So the old players or the incumbents were focusing a lot on their balance sheet, addressing new regulations, lawsuits. They were dealing with a portfolio of information systems, assets, and infrastructure. They were focusing on security and trust. If you remember, there were a lot of breaches in the payment industry, in the banks holding a lot of this data. And there were a lot of evolving consumer trends from millennials on one end to baby boomers to the other end. Moving on to the next slide, what happened in this market environment? Well, really in the past 3 to 4 years, we've seen a huge growth of fintech companies and startups moving into this segment, trying to disintermediate the banks by offering different business models, using new technologies, distribution channels, leveraging the low-cost structure, and being very nimble and fast to execute. So companies like LendingClub, Ameritrade early last decade, Intuit, Facebook, Google, Apple, and others have been the leaders trying to get into this set of financial services and payments. But they're not alone. They're followed by hundreds, if not thousands, of other startups that are trying to carve a niche in the fintech industry. Just in payments alone, we're talking about more than 500 players. So in total in fintech in the US, you're probably talking about 2,000 to 3,000 different startups in the segment. Now, focusing a little more on what is the agenda down the road, basically everybody, regulators, incumbents, and startups need to start working together to make sure that they service and provide more convenience to all the different market segments and unbanked population, make sure that the system is secure, costs are lower, and they provide a stable financial system. Regulations that are more nimble, that allow entrenched players to continue to secure the system and provide the stability, but at the same time allow other players to play into that market. Incumbents need to improve their competitiveness. They need to reduce costs, they need to leverage the technology they have, they need to better understand their consumers, not only the high-end, wealthy baby boomers, but also the new market segments like the millennials, and be able to partner with new startups. On the startup side, they need to continue to be fast in terms of the execution, differentiate, focus on specific segments where they can dominate, and also develop these partnerships. So there is a lot of work ahead. In the end, everybody needs to work together trying to develop all of the different solutions. And I think everybody should benefit by leveraging this new technologies and business model into a large market segment, which is fintech. Well, thank you very much for your time. I really appreciate the opportunity to share with you just a few minutes of some of my thoughts. and hopefully I'll be able to be with you in person next year. Thank you, and have a great conference.
Thank you for the presentation, Mr. Estrada. It is amazing to know that there are already thousands of the fintech startups in the United States and probably more in around the world. So let me start my first question with Mr. Htite. So I surprised, actually disclosure, I am actually the LendingClub customer. I put my little money to the LendingClub for testing out.
Smart idea.
And one of the most fascinating thing I surprised is that they actually sliced my lending and able to buy $25 coupon. So in that way, it looks like they diversify the risk management, and so that's very interesting. So my first question is that the obviously started LendingClub in the United States. I read from somewhere you were born in Canada, and then all of a sudden you quit LendingClub in 2012 and moved to China. You probably have never lived there before. And what's the reason? Why did you actually decided to start your own company in the China? So can you explain the background?
I never quit LendingClub. I'm still an advisor to LendingClub. And I still help a lot with the technology in LendingClub. Yes, a lot of people, especially in China, they ask me, well, you live in the US, why do you come to China? In Silicon Valley, before, when a business model succeeds, the next step is to go to Europe, to go to Canada, to go to Australia. The economy or the world has changed. Now, China is the second largest economy. Asia is the second place people should think about before you think about Europe, before you think about Canada. For me, the challenges that Asia has are very fascinating. Unlike the US, where we are people from all over the world decided to live together and everybody looks different, everybody has its own personality, philosophy, religion. Asia has very, very strong culture. And in the business of finance, you cannot succeed unless you understand the culture very well. I'm 100% sure whatever works for us in China is not going to be easily transported to Korea or Indonesia or Japan. Finance is a very private manner, and the way it's looked at, it's interesting. For example, in China, it's a sign of weakness to borrow money to use it for entertainment. In the US, we use our credit cards and we go to Las Vegas every time we want to. So you have to be sensitive to these cultural attributes of each region in order for you to create the right products, the right financial products in the countries where you are. And that fascinates me a lot. Fascinates me how we use technology to answer things that are much more important than money. Culture is much more important than money. Having technology serve that part of our lives is very interesting.
So how big is your company right now, Dianrong, after 3 years? And I read somewhere, you presented that you already have almost 1,000 employees right now. Is that
we
true?
have 1,300 employees.
1,300?
1,300.
Wow.
And we have, but that's not important because what's important is what kind of employees we have. So out of these employees, 135 are software engineers, about 120 are in risk management, and large group is business development and sales and operations. China, unlike the US, is not well automated when it comes to financial industry. In terms of size, the number of originations since we've started really giving loans, which is less than 2 years, it's almost 2 billion.
Almost 2 billion?
Almost 2 billion.
Origination
Yes.
so far accumulated?
So let me explain to you. It is very difficult to give the same type of loan in the US. In the US, if you borrow money, doesn't matter if it is $100 or $500,000, I have an incentive to pay back, because if I don't, my credit report is going to have a bad spot on it. It doesn't matter the amount. And I could be delinquent on $100, but a bank will not give me a mortgage for $1 million if I'm buying a house, or they will charge me higher. But in China, there is no such a thing. China actually has the largest credit bureau in the world, but also has the largest shadow banking, which are shadow banking, which are transactions that do happen, but they are not registered in the credit bureau. So when we are in the writing a person, we know a lot about what he does in the banking world, same quality as in the US, but maybe he does have another loan from shadow banking, and we need to find out. So that's why we have a large team. We need to figure out.
So you're actually competing against a kind of shadow banking system, right?
Competing, competition is a word that I really don't like, but I can tell you that customers will have a much cheaper loan than shadow banking. In China, there are the two markets, right? Interest rates on the banking markets are 12%, 13%, 14%. If it is business loan, it goes up to 25%. If you don't qualify, which only less than 10% of the people asking for loans qualify, if you don't qualify, your other option is to pay 50%. There is nothing in between. And I think that's not right for an economy. Because again, a small business that has to pay 30% will never be able to make it. Their revenue, their profit should be 50% in order to pay that loan.
Wow. Let me then ask the next questions to Mr. Han Kim. And Chinese P2P market is fascinating, but we don't have that kind of the P2P system, and our financial system is very conservative, and they're very resistant to some new company right now. And you're actually bold enough to make investment for the growing Korean fintech startup, in spite of there's a lot of regulations and a lot of hurdles. And can you explain your portfolio, fintech company in Korea, and your background to making investment for them?
Sure. I think this is a case where less bolder you could get. And since I didn't actually grow up in Korea and experience all these things as a given, there were two things I thought was quite interesting, and some things that I really wanted to be a part of the system fix. One was a very complicated process, and whether you're paying for goods on the internet or on your mobile phone, all the numbers and screens that you have to go through, it was surprising that a lot of my friends here just took it as a given. It's like, why can't you memorize your credit card number? I'm like, you kidding me? But the process doesn't need to be that complicated. And the fact that there was a lot of regulation that stipulated what the process should be, I thought was an opportunity. And I thought, you work with the regulators, try to fix some of these processes, and the fact that you could get a lot of feedback from various consumers in that fixing process, I thought you could create a very good company out of it, and that's why we invested in Viva Republic, and they are still enhancing the system. And on the P2P lending company, the law is right now a little unclear whether or not it's going to be legal, illegal, etc. But the basic, I think, opportunity we saw was just like Saul had mentioned. The risk isn't something that the regulators could define as this is a risk, and then there is a significant jump to another level, and this is the next risk level, and the next risk level. And the risk and return has to correlate, and it's more of a continuous line rather than a step ladder. And in Korea, what we saw, just like maybe in China, in some cases in the US before the lending clubs of the world came in, was you're either you could borrow either at 3 or 5% or less, and you could borrow at 30%. And there was nothing in between. And to us, it just didn't make sense because there is a risk-return curve that's a continuous line going throughout. And the fact that it has to be 5 or less or 20 or higher. The world risk and return curve is never shaped like that. So we thought there was a definite opportunity. And in fact, there's several startups starting in that area. And we basically ended up investing in the company where, we thought had the best chance of solving the problem. So it's basically the two large issues stemming from lots of regulations. One is the very complicated process that people take it as a given because that's how it always was. And the secondly is more of a continuous risk return curve line versus what it is today, which is a very step ladder function, very high step at that.
So as Han Kim said, P2P lending sector is just started. It's just get off the ground here, and several small startups they wanted to try that out. But in fact, there are a lot of skepticism and suspicion around that area. Some people saying that how they are able to some consumer protection, and someone saying that there are already consumer debt level in Korea is pretty high. So making lending so easy is actually kind of making people borrow more and spend more, and actually it affects the people's, making them actually really bad. Things like that. There's a conscience like that. And also from the regulator standpoint and how to, some protect the consumers and what's the benefit of the P2P lending and how we can actually kind of trust those small companies. So you probably had some kind of, challenge when you started your company in China. How did you do that? How did you make that out?
Yes, so first of all, if there are any entrepreneurs trying to start a P2P company in Korea, I'll say, very good, continue. You're going to be facing problems every day, but it's all worth it. Before I talk about China, I would like to share some information about LendingClub. We were shut down by the government in the US, and we couldn't operate for 5.5 months. We were a very small company. We had $5 million in the bank.
$5 million?
We had $5 million capital. And then we decided to call the SEC and say, hey, we have this great business model. This is what we do. Next day, we were shut down. And we had borrowers, we had lenders, and it was a crisis. But we worked with regulators. We had another round of funding. We were able to convince people to trust us. And that's what LendingClub came to today. So it only takes 1 or 2 chances to have a breakthrough. But you are trying every day, every day, every day. You will have high probability of success if you keep trying. Now China, I'm fascinated by how the regulations are actually working with the entrepreneurs. Like a month and a half ago, we were in a BOA forum, which is the equivalent of the World Economic Forum for China. And President Xi Jinping explicitly said, Internet Plus is a big part of the economy. So when we go today to meet our partners in China, whether they are super large banks or insurance companies, everybody repeats that sentence. So we know that the economy is going to be more and more digital. We know more and more internet finance is going to grow. If you look at third payment companies, the first license in China is 5 years old. It was given to Alipay and 4 other companies. But third payment companies have been operating in China for 13 years.
13 years.
13 years. So there is a period of 8 years before it was licensed. And it's very understandable. We are asking regulators to do something very, very difficult. We are asking them to understand our business model. We are asking them to understand how the technology works. And we are telling them, oh, you should regulate this. Whether you are a US regulator or a Chinese regulator, I don't know, but I assume whether you are a Korean regulator, you're not going to spend time regulating an industry that is super small. because you have to regulate healthcare, you have to regulate education, you have to regulate a lot of things. So yes, you should let innovation grow. When it gets to a certain level, then you intervene. If you intervene too early, you're going to choke it, and it's going to go nowhere. The worst thing to do is to scare people like Mr. Han not to invest. So you shouldn't think, oh, the regulators are going to do this or going to do that. No, we need investors to take the risk. We need entrepreneurs to take the risk. And we need to educate regulators and explain what we do. The more they understand, the easier for them to see that this is actually solving the shadow banking problem in China. You want it. This is solving the credit crisis in Korea. You want it. So that's how the relationship between entrepreneurs and the regulators should be.
So how often do you meet regulators in Korea?
My co-founder in China is a lawyer, the same way as my co-founder in the US is a lawyer too. So he meets about once every 2 months. So there are 6 companies in China that always meet with the CBRC to decide, or not to decide, to discuss the status of what everyone is doing, and then the regulators will challenge us with questions. They will say, okay, what if somebody lent money and lost his money? How do you address that? Have you disclosed enough risk? Are you working with guaranteed loans or not guaranteed loans? They are very interesting questions. We learn from that too. We really do.
Great. One more question, and you said the bank is going to be kind of infrastructure for the fintech companies, and then how do you actually working with some big bank?
Good question. So, believe it or not, when we started LendingClub, the plan was to work with banks. We wanted to work with banks first. We never wanted to do risk management and borrower acquisition and all that. It's very complicated. But we went to the first one, the second one, the third one, and they all tell us, go away, go away, go away. So we said, okay, we're going to do it ourselves. So we started and we started and we started, and then they start noticing how quickly we are growing. And then they got interested. You have to prove, again, I repeat, there is no disruption in the world. There is only transformation. You have to prove to big banks that what you have makes sense. The CEO of Wells Fargo or Chase or Bank of China is not going to go to his board and he's going to say, okay, tomorrow we're going to start internet finance, and I'm not going to make the numbers for the 3 next quarters. He's going to be fired. So you need to wait until it matures to a certain level before a bank can do that. Now, what's happening in China is very fascinating. That transformation is so fast. Banks are coming to us, and they are telling us, why is it that my customers are taking money from their bank account and sending it to you? What do you have that I don't have?
They want to learn from you.
Yes, and we are happy teaching them. And then we tell them, this is how it works, and this is what's behind it. This is the technology, and that's our domain of expertise. Next thing we know, we are signing contracts with them. So we announced Suzhou Bank last November. We signed the contract. The product is opening to the public 28th of May. And it's going to be the first bank in the world to move to internet finance, earlier than banks in the US, actually. And we have another 4 banks that we are working with to duplicate the same model. So basically, they will use our technology, they will use our platform to offer similar services as us. And we are not creating competition to us, we are actually helping the banking world, the banking industry of China that way.
I have so many questions, but we are already running out of time. So I have one simple question, just a closing question. Please answer it very quickly. So in fintech world, in finance industry, for the next 5 or 10 years, what's going to happen?
Okay, I think people that are born today are not going to have a bank account when they are 18 years old. They're going to have something different than a bank account. Maybe everything they're going to do, they're going to be in their mobile. I think we're going to see a huge adoption of internet finance by very large financial institutions, banks in particular. And I also predict that the insurance industry is going to be transformed by internet insurance. Don't call it internet finance. I think we're going to see companies, I know a few are already building the model. Huh?
Yeah.
Absolutely. Crowdfunding is going to become bigger and bigger. Absolutely.
Your turn. What's going to happen in next 5 or 10 years?
No, I agree. I think the insurance area will be sort of, that's also very highly regulated, lots of inefficiency in the process from the originator to the borrower. So that's the next area where the whole thing just should be gutted out. And also in the investment advisory services where people take a lot of money for doing very little, that also needs to be transformed. So basically, it's like if you look at any area where you're protected by a certain set of regulation and you're not innovating, the entrepreneurs will basically innovate for that industry. So we firmly believe it, and we're ready to fund any interesting entrepreneurs who are doing it.
Thank you. We are getting into the really interesting time. Okay, thank you for taking your times and sharing great insight. Thank you very much.